Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 5th of January, comes to you from London. And we got off to a good start for the new year in Asia and Europe yesterday, but things faded when the US opened. So we'll take a look at that. We were down 1.5% in the US. So driven a little bit by uncertainty with Trump and coronavirus lockdowns coming into effect is not helping markets to hold the gains. Looking at the dollar index sinking lower. This trend continues, dollar weakness. We did have a little bit of respite yesterday, but the trend is unchanged. We're bearish on all three time frames, and that means that the euro against the dollar is looking strong. We've talked about this many times, the consolidation pattern and the run. Remember, this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market with the corresponding point and figure charts and targets. And these are all my tracker charts, and I just work through. You can get this template on the Updata website. Taking a look at the yen, we're sitting below that 103 level against the dollar, so still looking bearish there. And sterling holding the 135 level against that weaker US dollar. Sterling, of course, seeing some strength on the run up to that Brexit deal, and we're seeing multi-year highs. We have just turned bearish though yesterday, so interestingly, we are just seeing sterling turning away there. Taking a look at sterling against the euro, we're sitting at 110. We seem steady around this 110 level. Not a lot of change over the last few months. We have turned slightly bearish there as well. Bitcoin had a big fall yesterday, had this massive move up to $34,000 for Bitcoin, and we're just seeing some signs of some bearishness creeping in here, having run that far. We probably need to pull back before we can run again. And looking at the S&P 500 index we mentioned yesterday, that was down 1.5%. So it's a sharp fall there. Very big change in sentiment. The futures suggested we'd open higher. We actually didn't. In the end, we fell away. And politics playing quite a big part there in the US. The Nasdaq fell by a similar amount and just struggling really to hold on to these gains and looking a little bit precarious there. We've got a downside target of 4.7% if we go lower than the low yesterday, so we need to watch that. The Dow was down 1.25%, so we're seeing fall away there, but we are still holding the 30,000 level. The futures this morning are up slightly, so we're seeing the S&P E-mini up 0.2%, the Nasdaq E-mini up 0.15%, so just suggests a little bit better than flat at the opening. We did see the VIX volatility jump yesterday back into the mid-20s. Not enough to change the medium and long-term trends, of course, but the short-term trend is that the VIX is just rising. So we might well have seen a bottom at around 20, and that, of course, was a low level through 2019, and we were above that pretty much all of 2020, so it'd be interesting to see what we do this year. FTSE 100 is actually holding its gains today, despite new lockdowns in the UK. The FTSE future is up 0.43%. The DAX in Germany up 0.25%. So markets are taking these lockdowns in a stride. The DAX sitting on resistance really, and we need to see a break there. The CAC 40 is also just up slightly this morning, and if we look at Japan, that is also just a little bit weaker, that stronger yen having an effect on Japanese stocks. Bucking the trend in Asia, we see the Hang Seng up 0.2%. That consolidation pattern and a breakout looking like we might move to a long-term trend change here, which we haven't seen for a few years on the Hang Seng. And looking at the Chinese market, this is really significant. We're seeing the break here, move, consolidation and break, and we've been waiting for that for several months, and now we're seeing it play on there. So really quite key there that we're seeing that break running. Looking at the Sensex, we're up at just over 1/3% there. The Aussie market was very strong on Monday, ended down very slightly on yesterday, overnight. And if we look at taking a look at commodities now, we go to gold first off. We see gold actually just down slightly this morning, but actually looking pretty strong, making the transition to medium-term bullish. And interestingly, there we see also gold just breaking that downtrend now, so looking like we're about to run again in gold. Bullish on all three timeframes, effectively, with good upside targets. Of course, if we break to new highs on gold, 3,000 is the target. That's a long way higher. Silver also looking good, and we're seeing here silver pushing higher as well, and then copper sitting up 1% as well. So we're seeing quite a lot of strength there. US 10-year yield sitting at 0.93%. So they're steady in the 90s. That trend that we've seen since August really holding, if you like. We are just short-term a little bit bearish. Taking a look at the energy mix now. We've got Brent crude falling back sharply yesterday, was looking good, and then quite big moves to the downside, so quite interesting there. And if we look at WTI, much the same picture. So we're seeing WTI just falling away there as well. US nat gas sitting at 268. So we're just seeing a little bit of an improvement there. We are seeing this driven heavily by LNG, so that's going to be quite key as well. Looking at RBOB, we're slightly low there, and then looking at emissions, we're pulling back. We can see quite a lot of the energy mix pulling back today, having had a strong start to the year. Emissions down 1.4%. We do have a little downside target to 3240, and then if we look at MBP, we're down 4.5%, so quite a big pullback there, and 6% on TTF, so a lot of volatility there in the price. Taking a look at German power, we're down 2% this morning at 49.64. We in the new contract, we were above that 50 euro mark, just pulling back there. 53 is the level now that we need to watch. That's rollover adjusted, of course, but that's the level that we need to watch, and we've roll adjusted the charts. And that's pretty much it for today. Until tomorrow, happy charting. See you then.